Dear students, today's my topic is accounting principles. So, what is accounting principles? Accounting has also certain set of principles and rules. Accounting is based on some rules, regulations based like subjects like mathematics, science, etc. These are followed necessarily in accounting also. In accountancy, one has to observe and adopt certain rules, regulations, norms, and standards. These rules may be subject to constant research and change depending upon change in customs, conventions, traditions, and influence of society and the government, etc. However, such rules are necessary to be adopted while recording the transaction, interpreting, and reporting the business transactions. These rules are known as accounting principles. So, definition of accounting principles as per AICPA, American Institute of Certified Public Accountants, has defined the accounting principles as a general law or rule adopted or professed as a guide to action, a settled ground or basis of conduct or practice. How we maintain our account, these are the guidelines which we followed in accounting. Now, the characteristics of accounting principles. Accounting principles are presented guidelines. Accounting principles are based on general rules. Accounting principles are created from experience. Accounting principles are generally accepted by all. It depends on the following: relevant, it should be relevant, it should be on the basis of objectivity or feasibility. Now, GAP, generally accepted accounting principles. To maintain uniformity and consistency in accounting records, certain values or principles have developed by accounting profession. These accounting principles are described in various ways such as concepts, conventions, assumptions, postulates, modifying principles, etc. These principles have been developed on the basis of past experience, uses, customs, statements of professional bodies, and regulation of government bodies or agencies. These principles are not static in nature and are bound to be influenced by changes in the legal, social, economic environment and as per the need of the users of accounting service. Now, the types of accounting principles. There are mainly two types of accounting principles: accounting concepts or assumptions and accounting conventions. Now, accounting concepts or assumptions. The accounting concepts or postulates mean necessary conditions or assumptions required to be followed while recording the transactions. These are the assumptions. So, these assumptions provide a foundation for the accounting process. Without any consideration of these assumptions or concepts, no business can prepare its final accounts. Some important concepts are given below. Number one, business entity concept. In this concept, business or separate entity concept. In this concept, business and businessman, both entities are different from each other. Businessmen maintain business account on behalf of business account, but both entities are different from each other. Going concern concept. In business, it's a process, it's going concern based, it's based on long term basis. In partnership also, if any partner goes, then another partner will come. So in the same manner, in company also, if one partner has gone, then another will come. So in sole proprietor also, if one single proprietor has gone, then any other family member maintain or carry on his or her business. Money measurement concept means all the transactions we will include in business or record in transactions only on the measurement basis in money. Those are related in financial character. If we can't measure any transaction in money in rupees manner, so we can't enter in business that transactions. Next, verifiable, objective, evidence concept. Means we will include all the transactions in verifiable. We will collect all the matters those are related in verifiable, means verification based. Suppose we purchased any material, so we will collect all the receipts in proof manner. So we will collect all the matters those are related to our evidence basis, or we will maintain all the receipts those are necessary for maintain our accounts. Next, accounting period concept. In accounting period concept means we can maintain our accounts or closing our accounts on two bases. These can be two. One calendar year basis or another one financial year basis. Calendar year will close on 31st December and 1st January started date, and financial year 31st March is closing date and 1st April is starting date. So we will maintain on both bases, we maintain our accounts. Some from exceptions, means banking company closing or income taxation purpose, they will close their accounts on financial only and only financial closing year basis. But in other accounts we can maintain or close our accounts on both purposes. But we should notice this thing. If we we close our accounts on the basis of calendar year, so we should maintain this process. And if we close our accounts on the basis of financial period basis, so we should maintain this concept also. Okay, the next, historical cost concept. In this concept, we will maintain our accounts on historical cost basis. Means suppose we maintain our building account, so we will take that building or fixed asset on historical basis or their purchasing price basis. Next, real aspect concept. It's an important concept. Our accounts are maintained on real aspect basis. Means both entities are impact on two accounts basis. Debit always equivalent to credit, or liabilities, outside liabilities plus capital equal to assets. In accounting equation manner, it should be necessary. Next, revenue realization concept. Means we will include all the transactions those will relate to revenue realization based. We can divide it into three parts. Sales basis, it means we can transaction on the basis of delivery of goods. Suppose we will purchase goods on 15th April, but the delivery of that goods or the payment will that we purchase the goods on 15 April, and the payment will of that goods on 30th April. So we will consider on 15th April the delivery of goods or sale of goods. We should consider on 15th April, not 30th April. We will get that payment on 30th on approval basis, on contract basis. But we will consider that the sale of goods on 15th April. Second, cash basis or installment basis. It means some transactions related, we can relate it on only on cash basis. We can consider it revenue only on the basis of cash. Means suppose we purchase the goods on installment basis, so we cannot consider that goods on sale basis, but we will consider that goods on cash basis. Or when the installment will paid and when we will pay totally cash, then it consider as revenue realization. And the third one is production basis. It means long term projects basis. When we our production or our projects is longer, then in that case is we can consider revenue realization only on production basis. Next one is matching concept. We will consider transactions on matching concept. Means we will match all the expenses to our incomes. We will consider all expenses those are related to our current year basis. So and the those expenses are on the basis of outstanding or not paid till the ending of the ending of the accounting year. but we will consider that expenses and incomes also. Those incomes are related to our current year. So these are the matching concept. And the next one is expense concept. In this concept, in expense concept, we will consider there are two types of expenses, revenue nature and capital nature expenditure. So we should consider, we will understand, first we will understand what is a revenue expenditure and what is capital nature expenditure. Capital nature expenditure is related to fixed capital expenditure or related to long term basis. But revenue nature, if the expenses is generate any revenue, so we will consider that expenses in revenue nature. So we will consider revenue nature expenditure in our profit and loss account, but capital nature expenditure include in our fixed assets account, right? Then accounting conventions. Some rules have been commonly accepted by the professional accounting world as general guidelines for preparing the financial statements and reports for external reporting are called accounting conventions. These are as follows. These are on the basis of some traditions, custom based, and these are as follows. Convention of full disclosure. In this convention, we will disclose all or fully information about the related to our accounts. We should not any conceal or any hide the information from our customer or our accounting users. Principle of materiality. In this convention, we should provide all the related information, those are related to our subject matter, not any extra information, because that information will not be useful for our user. So related to our subject matter, we should provide information. Convention of consistency. In this convention, we should provide or we will maintain our accounts on consistency based. It means, suppose we maintain our accounts on 6 month basis, then we close our business, then it's not a proper way. Means uh, in this convention, consistency should be proper. In this convention means continuity. We should maintain the continuity in our business. It should not be break. Convention of conservatism or prudence. In this convention means uh, we will follow this convention. Conservatism, it's based on safer side. We will not provide our profit, totally profit as a distribution of dividend, but we will say take a safer side. We will maintain it as our future purpose or provision purpose. Convention of timeliness. In this convention, our decision will we will take the decision on time basis, so that we can take the benefit from that decisions. If we will take late decision, then those information will not worthwhile for us. Convention of industry practice means we should follow all the rules and regulations. Suppose we will take depreciation on the basis of fixed installment method or diminishing method, it's should be based on industry practice basis. Suppose we will practice some method in industry practice, so we should follow these rules and regulations in our accounting also. These are the accounting concepts and conventions. I think you should understand it better. So if you have faced any problem, then you can ask from me. Thank you.